When Eric Barn, Elizabeth Yin and She & Co. set out to launch Hustle Fund in 2017, they felt well positioned for success. Friends from Stanford University, they brought experience from Accelerator 500 startups, Instagram and NerdWallet, and their approach, writing $25,000 checks to startups and performing due diligence after the fact, seemed like a novel twist on traditional venture capital. They were in for a shock. I think as a first-time fund manager we completely underestimated how non-differentiated we were, Barn tells Forbes. Nice pitch deck for seed investing, they heard back. Join the list. To stand out with its now $30 million plus second fund, Hustle's partners are highly active on Twitter, a social media service Barn had quit before the need to self-market became clear, penning threads on ownership stakes and company building and generally mixing it up with their peers. And some flavor of that strategy is increasingly table stakes for micro-fund investors looking to compete in a VC market awash with capital, with new entrants like Turner Novak's early-stage fund Banana Capital and Li Jin's passion economy-focused Atelier Capital both making recent waves. Not coincidentally, each boasts around 70,000 Twitter followers. For those taking the pulse of the venture market from the online discourse, micro-VCs seem everywhere. But the data suggest a different story. There aren't more of them, they're just amplified, using specialized approaches and savvier internet distribution to punch above their weight. For those who are raising now, there is a different breed of VC, Barnes says. We have no choice but to be self-promoting. Gone are the days that you just needed to raise the capital and people will come to you. Micro funds, defined as sub-$50 million or sub-$100 million vehicles to invest in startups, have at best held serve with the industry overall by volume, according to PitchBook data revealed first in the Midas Touch newsletter. Such pools made up 51% of funds closed in 2020, down from 58% of funds closed in 2010. And with mega funds throwing large sums at private companies, such funds represented only 6% of capital raised overall in 2020, down from 14% a decade before. Those numbers are a surprise to practitioners themselves. Are you sure there are fewer funds today than 5+ years ago? Ryan Hoover, the Product Hunt co-founder and Weekend Fund founder, responded in an email. Nate Rodland, a general partner at microfund Elefund, says he was surprised by that too, especially when comparing his investing now to his experience on the other side of the table raising early-stage capital as a Robinhood founder in 2013. And to be sure, one limit of PitchBook's data is that this total doesn't include the industry's network of angel investors, which is somehow also seeing a decline in activity, or alternative small financing solutions like rolling funds or evergreen vehicles.